Hi there, Serial Trader here. Just going to try to do a fairly quick update, not to take too much time up during the week here. And looking at the hourly chart here on SPX. So a little bit of a minor relabeling as far as the subdivisions for either wave C or wave 3. But starting from our wave B or 2 peak up here, I have this labeled as the initial wave 1 down, ABC up, zigzag wave 2. This move at wave 3, and then A, B, C running flat wave 4. And that's actually good alternation between wave 2 and 4. Basically, wave 2 is sharp in a zigzag form pattern, and wave 4 was more sideways in a running flat. So that's good alternation between those two corrective waves. And then, of course, wave 5 down and finish the move. And again, it can always just go a little lower or a little higher than you expect before it finally turns, but it does turn. And pretty confident we have a bottom of some magnitude. I'm not sure whether it's going to be an ultimate bottom. It could be, but certainly a bottom of some magnitude. A tradable bottom was put in yesterday at 21.91 for either wave 5 of C or 3. Now, this rally that we're getting off the bottom, to be determined, but we're either going to get a nice, clear 5-wave impulsive rally that overlaps with this over here, which would remove the potential for the wave 1, 2, 3, 4, 5 labeling, and would kind of solidify the ABC scenario. And again, to overlap, we'd have to get up to 28.55 and change. So that's quite a ways away currently. 400 plus points away. Although on a day like today, where you went up, 200 plus points, if that kind of trajectory continues, it wouldn't take very long at all to get up there. Not saying that's going to happen so easily, but and the alternative is that we just do some sort of corrective fourth wave up that does not overlap with that 28.55 area. And if we do this, and then we start rolling back over, then we're certainly looking at a potential another move down for wave 5 of a still larger, downward sequence. But we're just not there yet to make that call. Under either scenario, this rally has more to go, even if it is just going to prove to be a bear market rally. And you also have to be willing to entertain that, hey, there's also the possibility that was the low. As in all previous major lows, hardly anyone thinks it's the low at the time, and it's short covering, we're just going to have a bear market rally, and that's how it always starts. And then sometimes, it has continuation, and then it becomes more than just a bear market rally, more than just a short covering rally. But that's how, sentiment-wise, that's how it always starts off in people's minds. So just keep that in mind. Remain flexible, remain open to whatever the market throws at you here. But certainly we are getting some clear subwaves off the bottom. So I just want to go to a 15-minute price chart. And yeah, that looks pretty good. And on this 15-minute price chart, you get a nice clean 5 waves off the bottom. So off Monday's bottom, we got a wave 1 up, wave 2 down, wave 3 up, wave 4 down today. That was the intraday pullback. And then we went up and made a new high into the close for a nice clean 5-wave advance. Now, nothing to say this 5-wave move is over. This 5th wave could continue on. But it looks like it's probably ready to pull back here short term fairly soon. And if that's the case, we would be looking for a corrective 3-wave decline, and that would certainly set up an attractive long entry opportunity should it present this way. And just currently, and again, not saying that the top of this initial move is in yet, but let's just say it was for estimation purposes. We do our simple fib levels to look at. Hang on there. So you can see even just the 38.2% retrace, if it's going to have a very small retrace, will be close to the previous fourth wave of that one lower degree. So that'd be an area of interest to look at if it finds some support there, kind of around that 2360. In this case, the 382 retrace would be 2351, so in that zone. And if we go deeper, of course, you're looking at your 50% retrace and your 618. But ideally, we have a bit more of an orderly, less scary looking retrace, presents a nice long entry opportunity, and then we get some continuation to the upside. Now, let's just say, I'll shrink this here a bit. Let's just say that's our 5 up, and we're just going to do in a conservative manner. That's A up, 5 up for A. Let's say we get down to the 50, 3 down for B. You'd be projecting another 5 waves up in a wave C. Even if we're just going to do a larger fourth wave and go down again, that would still get us just the equality relationship. Again, this is just some rough estimates because there's not enough data to do these relationships yet or anything. But if it unfolds that way, rough estimate, that would still get you close to 2600, which is still a good, nearly 200 points to the upside, even from current levels, before we have our little pullback here, which would certainly set up a nice fresh long entry. So just keep that in mind. Even if we just do a 535 ABC up, there is still a nice trade developing here on that. Now, if you're already in and you got in close to the bottom, congratulations. I would certainly put your stop above break even and let this thing run if it's going to. But as far as a fresh position to put on, I would definitely love to see, after this 5 waves up is done, a corrective decline, find support into one of these fib zones, and that would set up a nice long. I would be looking to play that with long futures, or perhaps a long ETF like SPXL, triple leverage long ETF. As far as playing call options, just outright long calls, implied volatility is still quite high. So unless you go fairly deep in the money to put more intrinsic value in the options, it doesn't seem that attractive to me to buy at the money or out the money calls here. Again, that's totally up to you what you do with that, though. So I'm not currently just outright long the market here with futures or anything, although I'm certainly looking for a nice pullback now that we've had this move up to do that. What I am long, though, and I got long yesterday, and hang on there, let me just get rid of this. I think we're done with this SPX hourly wave chart for now. So what I am long now is AMD, and I got long yesterday at AMD. I didn't get in at the exact lows, but I bought some call options kind of in this zone here in the low 39s, as I was discussing in that video over the weekend. And so far you can see, and let me just take that line off there. So far you can see we're unfolding in a fairly impulsive looking manner out of this bottoming area. And I think AMD's got some room to run here. Looks like we're in a little third wave here, and that could certainly extend a little further before we get more of a pullback in a fourth wave. But looks like AMD, this is just a nice corrective 3-wave decline. Looks like AMD might actually have some potential to take out its old highs, as crazy as that sounds. And that doesn't mean the market necessarily is going to make its old highs anytime soon, but AMD certainly could, by the way it's set up on the chart here. So I'm definitely loving AMD and loving that entry from yesterday. Pulled some damn good money out of it today, but I've also left some of the position to run here. So I just thought I'd point that out quickly. I don't want to take the time to do a separate update on AMD, so I just thought I'd throw it in here. But looking real nice here. Definitely a nice impulsive looking. We're cleanly breaking out this channel. All the subdivisions look good, even on shorter time frames. So AMD, it's not too late. Still got more upside here if you want to wait for a nice little corrective pullback to pull the trigger. Okay, so that's what I wanted to look at there. Now, before I get into this, You can see, I mean, I over 50,000 up on that AMD position. Again, I've taken some of it off, but I'm still long some of the June monthly 36 strike AMD calls, so I'm going to let those run until I think we've put in more of an important top there on AMD, which I currently definitely see it going higher before we do that. So I decided to do a little update on that since I did put that video on AMD over the weekend, but I'll stop mentioning AMD for now and get back here. So the wave chart, or the candlestick chart here on SPX, we have kind of a bullish reversal yesterday. It was looking more bullish at one point, but it closed a little weak. But a bit of a long lower shadow. I mean, it's kind of a poor looking hammer candlestick. Not an ideal one, but you can definitely see it kind of has the spirit of one there. Nice gap up today. Closed, shaven top. Closed near the highs of the day. We closed slightly above the T line, basically on the T line. So right now the T line is at 24.46, and we closed at 24.47. So basically closed right on the T line. Certainly very constructive looking, and this certainly suggests that a bottom of some magnitude is in place, and we should be looking higher here. Even if we just come up to test this 20-day simple moving average is in decline here, test that as resistance, possibly, because in a downtrend that can provide a nice target for a oversold rally. That would be kind of around that 2700 area. Again, though, that's a moving target, so that area will be lower tomorrow as soon as we start trading, but just thought I'd put that out there as a potential bounce target, 20-day simple moving average. Okay, so that's SPX. Not a whole lot to say because we're only 2 days into the week here. Now there is also a gap up here that's unfilled. That might be an interesting target as well if we get a little more juice to this move. And to fill that gap, we'd have to get up to just above 2,900. So 2901.54 would close this gap here. So that's significant upside from current levels, almost 500 points. And it would not be surprising to get there. But if we do, that would also invalidate the 1, 2, 3, 4, 5 scenario. Okay, so that's SPX. Let's look at the Dow Jones Industrial Average. So the Dow had a huge day today, up 11.37% on a closing basis, over 2,000 points. I think that's a points record. I'm not sure if it's a percentage record, but I'm sure it's certainly a high-ranking update in history. Again, similar kind of reversal candle on Monday. Nice gap up today. Strong day, closed near the highs, and we actually closed cleanly above the T-line on the Dow. So that's quite constructive. Again, we have not been anywhere near the T-line since we failed up here, a few weeks ago anyways. What date was that exactly? That was March 4th. So yeah, it's been a few weeks until we've actually interacted with the T-line like we did today. I will point out a little bit of a death cross starting there on the Dow. So 50-day simple moving average crossing below the 200-day simple. Now that doesn't mean that we're heading down, but that might mean that the overall longer-term trend is certainly in jeopardy, and I think we obviously know that it is. But even if the death cross proves to be potent and indicates further decline, again, we have to have our rally first before we can roll over again from this point. Okay, that's the Dow. And the Dow has a nice unfilled gap here, which would be, I think, an interesting target to the upside. And that would be 23,328 to fill this gap here on the Dow. And then, of course, a higher gap up here as well. But let's start with that one first before we get too excited. Nasdaq Composite. Nasdaq Composite looking real good here. So this actually had the best looking reversal candle on Monday. It barely even closed down on Monday. The other two indices closed quite a bit lower comparatively. And basically a nice doji star in the extreme oversold condition. Long lower and upper shadow, so a very indecisive candle. You often get those at important turning points. Of course, we confirmed today with bullish action, huge gap up, and we closed up near the high of the day and closed cleanly and convincingly above the T line. So the Nasdaq showing the best relative chart here as far as you know, the confidence level in more upside. And again, not to beat AMD to death, but the AMD is the Nasdaq type of stock, nice high-flying tech stock. So that's one of the reasons I point out in my weekend video on AMD as to why I was so interested in it. Aside from it just having a nice, clean technical setup, which it did. And the Nasdaq, again, continues to show that those types of stocks will probably get the most juice on a move up here. Okay, now Nasdaq gaps of interest here. No gap here, but up here, which is actually close to the 200-day simple moving average, which would be an interesting target even for just a bear market rally. If we were to go up to that 200-day and fail, that wouldn't be unusual. And to close that gap, which is around this 200-day simple right now, would be 8,375. So that's an interesting target area for a rally here. Keep your eyes on that. And let me have a look at the VIX. So the VIX, kind of an interesting candle here. VIX is still lower on the day, although barely so. Pretty much closed flat. I'm not sure as to the reliability of this data, but if this data is correct, then VIX had a huge move down, went as low as, according to this candle, went as low as 36.24, and then closed at 61.67. So if that's actually true, then that's an insane intraday move on the VIX. But this overall uptrend in the VIX, at least in the near term, is breaking. We are below the T line. We still close below the T line. And as long as VIX is now kind of correcting downward or trending downward, that is certainly a bullish condition for further market strength. Now, if we head over to that VXX chart I introduced there, it's again Robert Kelly's creation, but he has this 70-period simple moving average on a 30-minute price chart of VXX. And basically the premise is, okay, this entire uptrend since it began on VXX was contained by the 70 simple moving average, and now we've cleanly broken below that. So the uptrend in VXX for now has reversed into a downtrend. So as long as that is the condition, that is certainly a bullish indicator for the overall market. Obviously, when VXX is trending up, that is a bearish condition due to the inverse correlation. Okay, so just thought I'd point that out since I mentioned it in the last video. And on the VIX VVIX tool, we now have a confirmed buy signal. So again, I was talking about the preconditions here last time. So we have a divergence of the highs between VIX and VVIX, step 1. Step 2, get below the red moving average on VVIX, confirmed. Now step 3, get above the blue moving average on SPX. And now we have cleanly done that. So now we have an official buy signal here on the VIX VVIX tool. And it could be a very potent buy signal because we haven't had one in quite some time. So often the more beaten up something gets, or the more extreme it gets to the upside in the opposite scenario, the more substantial the reversal can be. So I just thought I'd point that out. Definitely rally on, buy signals on, and I'd certainly be looking to buy a short-term pullback on SPX there, looking to use the futures to do that. And I'm definitely still long some of those AMD calls, so that's how it stands right now. All right, should be interesting tomorrow and the rest of the week. Serial Trader signing off.